Why did a planned, gentle slowdown turn into a sudden, painful shock?
To get to the bottom of that, we have to meet our prime suspect, the Bank of England's own monetary policy. Because it turns out a big part of this unemployment spike wasn't an accident at all. Nope, it was completely intentional.
So, what is this restrictive monetary policy thing anyway? Well, put simply, it's when the central bank jacks up interest rates. That makes it more expensive for you and me to borrow money, for businesses to borrow money, so we all spend less. The whole point is to cool down the economy and fight inflation. But there's a pretty big side effect to all that cooling. Unemployment goes up.
And yeah, that was the plan all along. To get a handle on inflation, the Bank of England needed to create what they call economic slack. And they did that by deliberately pushing unemployment up from 4.0% toward their target of 4.75%. So this policy alone, it explains a big chunk of the rise, about three-quarters of it, in fact. But, and this is the key thing, it doesn't explain why we shot past the target to 5.0%. For that, we need to find an accomplice. And that accomplice showed up in the form of a major, and I mean major, fiscal policy change. It's like the Bank of England was gently tapping the brakes to slow the car down, and then the government came along and just slammed its foot on them. It turned a planned slowdown into a really painful jolt.